One of my favorite quotes of all time is by the great martial artist Bruce Lee, and that is, "I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times." Now, how does this relate to trading the financial markets? Well, if you practice a technique once or twice or even a few times, you won't be good at it. But if you practice something 10,000 times over and drill it into your muscle memory, it will all be aligned and it'll be a real weapon in your personal arsenal as a human being. And how can you do that as a trader? Through backtesting. In today's video, ladies and gentlemen, we're going to be covering how to properly backtest to turn you into a profitable trader. First and foremost, I want to address the fact that most traders that enter the Forex market, they don't backtest their system. They don't practice. So it's very reasonable to understand why most traders fail. They are not willing to put in the repetitions towards their rule-based system, if they even have one. So let's talk about the other important points here. As you backtest your trading system, your rules and guidelines for entering and exiting the market, you're going to be obtaining key vital data on your trading system. You'll be seeing the strengths of it, the low points, little things like, does my trading strategy work better in New York session as opposed to London session? Does my trading strategy do really bad during the Asian session or during the Sydney session when it's very choppy and there's a lot of consolidation going on in the market? Little things like that. You need to gather your data, and as you gain all of this important data, it's going to improve your overall confidence. Part of being a consistently profitable trader is your mental fortitude, your confidence. So when it comes down to live trading, you're in front of the market. Let's say it's the New York session and the market is going very fast. However, during that New York session, all of your rules light up that tell you, hey, you practiced this before, it's time to enter the market. As you gain that data, it will give you that past experience to pull the trigger on the trade to execute it within no time. What made me a profitable trader was backtesting my system hundreds and hundreds of times. So I've seen the same situation before in the past and got my reps in. So within a split-second decision, I'll know exactly in this present day to execute a trade if all of my rules line up. This is the importance of backtesting. So you can make split-second decisions immediately as soon as they line up for you. This is how you gain your edge in the market. Let's see how backtesting looks on the charts now. The process of backtesting is actually quite simple, and it's very important that you don't overcomplicate this process. How I personally do it that has resulted in years of trading results is, number one, picking a past period of time on the charts, using the rewind button to go to that specific date. Then when I'm at that specific date, I put together a thorough analysis, analyze market structure, put my market zones on there, and other confirmations. Once I speed together time and a lot of the trade confirmations align on the charts, I'll figure out my entry and profit targets, stop loss included, and then I'll speed up time and I'll gather my data to see if the charts hit my stop loss or went in favor of my trade and hit my profit target. And then I'm gathering all this data and writing it down in my trading journal. So you're going to be needing two specific things in order to backtest. Number one is a charting software. Once again, I am choosing TradingView to do my backtesting. And the second is going to be a place to store all of your data. And this is an example of my actual trading log. I'll have the date of when I'm placing the trade, the specific currency pair or whatever entity that I'm actually trading, the action, buy, sell, the result of the trade. At the end of every month, I have a win and loss percentage, my actual confirmations, my rules for entering the actual trade, my emotional state when I was trading, whether it was relaxed, angry, confident, whatever the case may be, and an actual chart link to that specific TradingView chart. Going back to the chart, how I specifically backtest is I'm going to hit this icon right down here, the arrow with the little calendar button. That'll be my go-to button. And let's go back exactly 1 year in time. I'll just hit 2021, October 6th, and I usually trade the New York session, so I will hit 8 o'clock Eastern Standard Time. That will automatically bring me to that specific date. And now, just so I don't cheat, I will stretch this out so I can't see what exactly price was doing, and I'll jump back a little bit more in time. Let's go to right here. And I'll hit this upper replay button and I'll click the time that price was going right back here, stretch price right back out. And now we have a fresh chart to do our analysis on. And so for backtesting purposes, now I'll just do a thorough analysis now that we've erased all that price data, and now we are going back in time now. So now I'll just place some specific areas of rejection, and this is just a hypothetical strategy right here. Have my tops, my bottoms, my areas of rejection, and my areas to potentially place trades on. And we'll look left to see where price was rejecting in the past. We had a rejection here, a rejection here, and we'll go down and hit these areas of rejection. So now I have my places and my areas of interest to potentially place trades. So now I'm going to rewind price. And actually, before I do that, what is the overall direction of the market? We'll go on the daily here. And we see we are in a downtrend. So right now it'd be optimal to place sell positions. So with that being said, maybe jump down to the 4-hour time frame and see the reactions of these specific prices. So I'll hit this forward button, speed up time, see price is potentially rejecting this area, speed up time. Do we have any confirmations here? I'll place this Fibonacci level to see how far this pullback is going to go. Didn't go through. We're going to wait for price to potentially come in here. And price did come in here. So now let's see if we can place a specific trade. We'll go short, hit our risk to reward tool. We'll have our target all the way down to the low. Hit it here, have the stop loss placed right above the 78.6. So as price comes into here, we can clearly see that this is an area of rejection. We have a high, a lower high, and a new lower high established. So we're building some confirmations off of this specific trading system. And let's keep forwarding price right now. Price came out, kept going, rejected, and we have an immediate trade that's in profit. Already 70 pips in profit, so that's amazing. At this point, I would place this specific stop loss at break even, and let's keep forwarding price. Price came down, and an area to take partial profits at, or even all of the profit, would be at this specific zone, this area of rejection here. So let's keep forwarding price. Price made a rejection off of our zone right here that we previously placed around this level here of support and another support here. So off of this area of a retest off this zone, we can clearly see price is continuing to make a new lower high point. Price is pulling down, and we hit this area right here. So we'll see how it responds to this area, and it automatically rejection wicks off. So we'll see and potentially take even more of our profit off. Continuing price right now. Price is moving and blows up above our 50 EMA. So this is just one example of how to backtest in the market, and you would just do this for each and every single one of your trades, whether you use moving average crossovers, supply and demand, order blocks, smart money concepts, market zone support and resistance, whatever the case may be, this is the process here. So we took a sell position with a 5, almost a 6-to-1 reward to risk ratio, almost making 6 times what we could be making. And we can see here that the trade has fully acquired right now off of the rejection of the zone 155 pips. So this is amazing for a specific trade that had a full grand destination of a profit target of almost 300 pips right here, as you can see. So this is just one way of backtesting. I would do this over and over and over again, and you can gather data to see which market sessions your trading system has optimally performed in and what trading sessions your trading system doesn't perform well in. Right now, over time, I see that my trading system at 9 a.m. took some time to consolidate during New York session, and as New York session it went into the Asian session, it continued to drop even further, and at 5 a.m. around London session it reversed and pulled back from what occurred from New York session to Asian session. And these are the types of things that you want to record so you know in real time when your trading system is going to optimally perform, and at the same time you'll know when to stay out of the market, which is equally as important. And it's as simple as that, folks. Backtesting is an amazing practice tool, and all you're using is the replay and forward button, and you are just practicing and gathering crucial amounts of data. So in real time, when the market is moving very fast like this, you know exactly what to react for. So you can instantly hop in the market and instantly exit the market based off of what you've practiced in previous price data. So how often should you be actually backtesting? For me, if you want to take trading seriously, you should be doing this pretty much every day, if not at least minimum 5 days a week. This is going to speed up your progression with trading and turn you eventually, if you do this right and you gather a phenomenal trading system and you are psychologically equipped to handle the market, it could turn you into a profitable trader. No ifs, ands, or buts. But what you put into it is what you'll get out, just like anything else in life. So just keep that in mind. The more you backtest, the more you practice, obviously, the better you will be at this, and you can refine your system over time based off of, once again, the strengths and weaknesses of your trading system. So with all that being said, if you received any value from this and this example alone, you can cater to this and refine this to your trading strategy. Leave a like, comment, subscribe for more videos, and until next time, folks.